Good morning, everyone. Thank you for joining us on our next series of best webinars. Today we'll talk about streamlining payroll and HR during COVID-19. So lots of valuable information presented today. But before then, we'll go ahead and just go over some really brief housekeeping rules. I'm sure you all have heard these, but just as a reminder as well. If you have a mic on, please just go ahead and make sure you mute yourself. Also, any distracting video or any video, you could feel free to turn off your video as well. We'll be sharing a presentation throughout the webinar. Also, feel free to put in any questions. I'll be monitoring the chat box for any questions for our speaker today. And we'll go ahead and answer any questions at the end. And you'll receive this recording along with our post-event survey at the conclusion of today's webinar. So be on the lookout for that. And as we begin, we also ask that you please put in your contact information, just a nice little way of networking now that we've transitioned everything to an online environment. So I'll go ahead and stop sharing my screen. I'd like to introduce Stephen Harris, our presenter today, and he is with Journey Payroll and HR. So he'll be providing you all with valuable information and very much needed during these unprecedented times. So I'll go ahead and stop sharing. And Stephen, you could go ahead and take it from here. Thank you.
Thank you so much, Elizabeth. I really appreciate the opportunity to present here today. And you should be able to see my screen now. Can you see that now?
Yes.
Thank you.
Yes.
Okay, are you seeing the PowerPoint or are you seeing the slide admin view?
The PowerPoint.
Okay, perfect. So I do appreciate, again, Elizabeth and the Hispanic Chamber, the opportunity for being able to present today. As Elizabeth said, I'm one of the owners for Journey Payroll and HR here in Phoenix. And the topic that we're going to be talking about today is streamlining payroll and HR during COVID. There's obviously a lot of nuances and a lot of changes in a quote unquote new normal that we're all going through. And we've seen a lot of different things from our small business clients, primarily focused in the Phoenix and Arizona market. But we focus on payroll taxes, time clock, HR, onboarding, and things like that. So again, really appreciate the opportunity. And the goal today is for you guys to learn something new, pick up some new nuggets. And if there's ever anything after this webinar that you need, feel free to reach out. Okay, so a little bit about me. I am a certified payroll professional. I'm certified since about 2015. I've been in the payroll industry for over 12 years. Previously worked at ADP, which is the largest payroll company in the world. It's where I gained most of my knowledge in payroll. And Journey Payroll and HR has been around for over 11 years. However, we have the Phoenix location open for over 3 years, and that's where I came in to serve the Phoenix market and Valley-wide for small to mid-sized companies. So today's agenda, what we'll do is, I thought we'd start with just the basics of payroll and HR, just kind of give an idea of what it's like to go through a day in the life of a payroll professional and how to process payroll and go through HR related items as an employer. And then we'll go through the COVID-19 payroll related acts, laws, and grants that have happened since March and kind of talk about the ins and outs of those and how it affects you as an employer. And then at the end, we'll talk about best practices in streamlining some of those processes. So the first thing about payroll is I can tell you it's a lot more than just handing someone a paycheck. There's a lot of nuances to the new hire setup, gross to net calculation, paying your employees, paying taxes, filing tax returns. There's a whole life cycle as you onboard a new employee, all the way through to termination and what that looks like. It can be a daunting task for any HR manager or any payroll manager that may be running a small business or for a larger company. A lot of times with small businesses, it falls on the owner to manage this process as they may not have the resources to hire within to manage all of this for them. So when you talk about bringing on new employees, initial setup and compliance, you have to categorize your employees, right? So you have a non-exempt employee, which is an hourly employee that would be eligible for overtime. They would also be eligible for minimum wage. So in Arizona, any hours worked over 40 is considered overtime, and they can't be asked to work off the clock. They're not a salary person. And so these are a good job description will help in building and understanding what types of employees that you're going to hire. An exempt employee is someone that's salary, right? So someone that is exempt from overtime, exempt from minimum wage. They do, this just raised in 2020, they are required to be paid a minimum of $684 a week if you want to classify an employee as an exempt employee. Now, you can still hire people and pay them salary and pay them less than the $684 a week. However, they would be eligible for overtime at that point. An exempt employee would be some sort of professional, managerial type supervisor role that manages at least 2 people, or medical professional, things like that. And then the other item that I notice a lot here in Arizona is 1099 versus W-2. Now, in the eyes of the Department of Labor, misclassifying an employee is a huge concern. I mean, there's a lot of differences when it comes to 1099 W-2 and how they're asked to work. But the biggest difference has to do with taxes. So when you bring on a 1099 contractor, they're contracted for a specific job, but you do not, as the employer, deduct taxes or pay any employer-related taxes on behalf of this 1099 contractor. They are considered self-employed, and they will file their own self-employment tax at the end of the year with their CPA. A 1099 person also cannot necessarily be told when to work, how to work. They're as easy as giving them a job, and then they do it on their timeline and get it done when you need them to, but they can't really be managed like a regular employee would. So a W-2 is hired under an employment agreement, and that's where the payroll and payroll taxes come into play. So you have Arizona Prop 206. This was passed in 2017. This applies, everything that we're going to talk about applies to a W-2 employee. Okay, as far as the IRS and Department of Labor are concerned, that's where payroll comes in, payroll taxes are issued in W-2s. So Prop 206, specifically in Arizona, there was 2 big components that happened with this. The Arizona minimum wage is now up to $12 an hour in 2020. That rose $1 an hour starting back in 2017. However, in the city of Flagstaff, the minimum wage is actually $13. So if you have anyone working in Flagstaff, that's one area to be aware of. But the other biggest component is the mandatory paid sick leave. So Arizona adopted a mandatory paid sick leave. They're not the first state to do this, but each employee, it doesn't matter if they're hourly, salary, part-time, full-time, temporary, seasonal, if they're a W-2 employee, they are eligible to earn 1 hour of sick time for every 30 hours worked, and that's paid sick time. If your business has less than 15 employees, they're eligible to earn up to 24 hours per year. If your business has 15 or more employees, they're eligible to earn up to 40 hours per year. So 3 days or 5 days, depending on the size of business. Now, these are the minimum requirements. Obviously, go above and beyond, and however you build your handbook and build out these paid time off policies, you can certainly offer as much as you like, but the minimum states this accrual based on a 12-month accrual period. All right, so when you're looking to hire an employee, you have your main federal and state forms, your I-9, which is the federal form of employment eligibility. Your W-4 form is the federal form for the employee to select their federal tax withholdings. The A-4 form is the Arizona state withholding tax percentages. And then you also, it's a really good idea to have a rock solid handbook. A handbook is kind of like your Bible, if you will, for your business, and it's a good guideline should anything arise. And it's a clear communication with the employee of any policies that you have for your businesses. It could be whether you do drug screens or have a uniform policy or a cell phone or social media policy. All of these types of things that you want your employees to adhere by should be built into your handbook, as well as a job description. So I talked about the different classifications of employees, whether they're exempt, non-exempt, or 1099 W-2. It's good to have a job description, so that way that new employee understands their role and understands the duties that are going to make them successful. Now, new hire reporting. Arizona requires that all new hires are reported to the state within 20 days of hire date. And the reason for this, most states have new hire reporting. And the reason for this is if the employee has any child support or garnishments on their wages, the governments do need to know where their current employer and place of work is, so that way they can make sure that those don't fall through the cracks. So as the employer, you're required to report new hires within 20 days. And in Arizona, one of about 8 or 9 states across the country, E-Verify is required in Arizona. So E-Verify is where the employee fills out the I-9 with their personal information, social security number, address, name, and all that. They would supply a driver's license, social security card, a passport, or birth certificate, or some verification information. You as the employer will look at the I-9 and verify the documents, complete the employer portion of that, and then log on to the E-Verify system and process them through E-Verify to confirm their employment eligibility. All right, so in Arizona, when you pay your employees, when you have W-2 employees, they must be paid at least twice a month, no more than 16 days apart. So a typical pay frequency is either semi-monthly, which is 2 times a month, and that's 24 payroll pay periods per year. That can be on the 1st and the 15th and the last day of the month, the 5th and the 20th. You can choose any 2 check dates that you'd like in the month. Typically, they're going to be spread out over a 14, 15, 16-day window. But the pay date must be no more than 5 days after the end of the pay period. So if you're paying bi-weekly, your pay period may end on Sunday and then you pay on Friday. If you're paying weekly, same pay cycle. It could be a Monday through Sunday pay period and then paying on check dates of Friday. So weekly would be every week on the same day of the week. Bi-weekly would be every other week on the same day of the week. And then you also have multiple choices of methods of payment. Arizona says you can't force direct deposit. However, there are alternatives to a paper check. So paper checks, the easiest form of handing someone their net pay. However, most employers and what we're seeing is becoming more electronic in the way they pay their employees. Direct deposit is pretty standard, standard practice the last 15 years. ACH processing, where you are now depositing the net amount into the employee's checking or savings account at a bank. They then can access to move funds or pull money from the ATM. But one of the newer methods is a payroll card. A payroll card is a great electronic alternative to the paper check. And it's essentially a Visa debit card where their net pay gets deposited onto the card each payroll. The employee can use that card just anywhere a debit card is available or is allowable to be used. They can use it at an ATM, they can cash out funds over a bank, they can view their balance online, or they can just swipe it at anywhere it's accepted. So a payroll card is a really neat way to become more electronic, and it helps employers eliminate any delivery fees or any stop check payment fees if employees lose checks. It also helps the employee with any check cashing fees. So if they don't have a banking establishment and they're going to a check cashing establishment, typically those are very costly. So a payroll card is a very efficient and cost-effective way to pay employees. And then you have your final pay laws in Arizona. So let's say an employee quits. Okay, so no later than next payday. So an employee quits today, payday is Friday. Then we want to get them paid out. All right. If an employee is laid off or fired, then within 7 days of the term date or end of the current pay period, whichever is sooner. Okay. So there are final pay laws that you do want to adhere to. You can search all of this information online, but these are certain areas of compliance that as a small or mid-sized business owner must be aware of to adhere to some of these laws. The last thing you need is an employee to report any certain information to the Department of Labor and run into the case of an audit. All right, so now when you're paying employees, you have to figure out the gross net calculation. Utilizing a software to handle this would be the best bet. But you have your standard federal and state withholdings. That's when the employee fills out their W-4, their A-4, and depending on how they filled those forms out, is how you'll set them up in the system or calculate their gross to net wages. In 2020, there was a new W-4 form out. If you remember in previous years, it was as simple as choosing single or married or head of household and the number of dependents, anywhere from 0 to 13 dependents. Well, now there is a new W-4 form in 2020, and the goal of this form, it is a little bit more complex, but the goal of the form is to really identify that individual's financial situation between them and their spouse and their family in order to eliminate an overpayment or underpayment come tax time. So the goal is to always have a wash. When you file your W-2, you don't owe any taxes and you're not getting a refund. That means that you're not giving the IRS too much money throughout the previous year, and you get to hold on to those funds. So the 2020 W-4 form, it looks at if your spouse works. It looks at the number of children under 17. It looks at other dependents that may be living in your household. And it really pinpoints where those tax withholdings should be. And like I said, in the end, it should wash out when the employee files their W-2 if they filled out their W-4 correctly. So then you also have your Social Security and Medicare tax. These are what we call FICA tax. These are federal taxes that have fixed rates. So the 6.2% is paid by the employee. You have an additional 6.2% that's paid by the employer on top of their gross wages. Once the employee reaches over $137,700 in wages, they no longer are responsible for paying, and neither is the employer responsible for paying Social Security tax on any wages. Medicare, on the other hand, it never goes away. They will pay 1.45% on their gross wages, and then the employer will also pay 1.45% on their gross wages. Depending on wage limits and their filing status, there is additional Medicare for highly compensated employees that the employer the employee would pay out of their gross check. Now, there are other deductions to be concerned about. Maybe you offer a 401k plan, or maybe you offer a health insurance plan, or you have child support and garnishments. So some of these deductions, we need to make sure that they're set up as pre-tax or post-tax. Most health benefits are going to be pre-tax, meaning if you're going to pay an employee $1,000 and you're going to deduct $100 in pre-tax medical insurance premium, that means the employee is paying you with pre-tax dollars back for the medical bill or the premium for their policy. Now they're only being taxed, that Social Security Medicare tax is being taxed on the $900, not the full $1,000 of their gross. 401k plan, same thing, pre-tax, but they're only pre-tax for withholding only, so that you would still deduct the Social Security and Medicare. Now, typical post-tax deductions, again, would be child support, garnishments, things like that. You would pay your employees, calculate the taxes, and then whatever's left over, their disposable income, you would then deduct or calculate the garnishments, child support. If you are an owner of an S-Corp business, you are not eligible to take pre-tax deductions. Any company paid benefits are considered income as it for a 2% shareholder or more in an S-Corp. So if the business pays for your health insurance, and let's say they pay $15,000 a year, that must be recorded as income and it is taxable. If the owner also wants to deduct and pay back the business for some of that, they have to set it up as a post-tax deduction. All right, and then paying employer taxes, again, there's a lot that goes into payroll. There's a lot of federal withholding pay frequencies depending on how many liability is at. You're either going to pay in quarterly, monthly, semi-weekly, or next day. If you have over $100,000 in tax liability, you are required to make those payments to the IRS next day. But this includes the employee federal withholding, the employee FICA, which is Social Security Medicare, as well as the employer portion of Social Security and Medicare. And then you also have your unemployment taxes. So these are not employee taxes, these are employer taxes. Federal unemployment is always 0.06% I'm sorry, 0.6%, it's a typo there. but on the first 7,000 in wages, then that falls off. So after you pay an employee 7,000 in wages, it equates to $42 per year. You'll pay that tax in for each employee. State unemployment is, again, follows federal rules. The wage-based limit is 7,000. New business tax rate is 2%. However, it varies every year. So depending on if you have turnover or an employee files unemployment and wins that claim, or your revenues go up, the state tracks that, and your unemployment rate will adjust each year. All right, and most of these payments, tax payments, can be paid electronically. All right, now filing tax returns. Not only have you calculated all of your taxes, you've got the money you deducted from your employees, now you're ready. Now, once you know your deposit frequency and you understand when they're due, you've got to file your tax returns. So the IRS and the state agency will look at how all the tax payments that you've paid in throughout the quarter or the year, and then you file that return, and then they will reconcile everything and report any discrepancies. So you have your federal 941 return, your state withholding return, unemployment. Those are all quarterly returns. So every quarter, you're going to file payroll tax returns. Annually, you're going to have your federal unemployment return, and then also your state withholding reconciliation for Arizona. And then you issue W-2s to all your employees by January 31st each year, as well as the W-3 to the SSA each year. All right, and then the last thing that we'll talk about, just from basic payroll knowledge and just record keeping. It's a great idea to have good records in case of an audit. It's always generally a great idea to keep your tax returns, your W-2s, and all your pay information for up to 3 years. But I would always, there's no sense in getting rid of that information. So a great way to streamline is save it electronically. If you have a scanner, scan it in, or if you have a system that allows you to upload documents, save them within there. You never know what can pop up in the eyes of the IRS and the Department of Labor. So it's always good to save your payroll records, save your I-9s for your new hires in case of an audit, either for 3 years or 1 year after termination, whichever is longer. And then again, that earned paid sick time that we talked about with Arizona, keep track of the amount they've earned, the amount of time they've taken per year, and the amount that they've earned, or the amount of pay that they've received as earned paid sick time. Now, Arizona does require this be reported on the pay stub itself or an attachment to the pay stub itself. So that way the employee is well aware of their balances as well. Okay, so moving on to COVID payroll related acts, laws, and grants. So we went through a high level overview of payroll, taxes, some HR items, and what it looks like to handle that process in-house as an employer, which can be a daunting task. Well, now this year has changed quite a bit. And what does COVID-19, how does that affect your business? And what are those laws and grants that are now requiring you to manage even more in your business, and some that will also help you and the employer? So the first act that was passed back in March 18th was the Families First Coronavirus Response Act. I'll get into more detail about this in just a minute, but essentially this was an emergency paid sick leave for those employees affected by COVID-19. The next act that was passed was the CARES Act. And that's one of the reasons we're having these webinars, is talking about all of the nuances of the CARES Act. That was passed back in March. The biggest payroll related items out of that act was the paycheck protection, which I'm sure majority of you are well aware of, as well as the employer tax deferral and the employee retention credit. So we'll talk about those items and what that looks like. Then recently, the Paycheck Protection Program Flexibility Act was passed in June, but even more recently, just in the past couple of weeks, there was an update to that. So we'll get into some of those, to that information and how the original law looked and what the new flexibility and updates look to apply for forgiveness and the different terms of the Paycheck Protection Program. And then last but not least, the most recent is the executive order passed by the President of the United States, where the employee tax deferral. There's still a lot of guidance that we're waiting on that, but we'll get into what that executive order states and how that looks as we move along through the presentation. Okay, so first, the Families First Coronavirus Response Act. What can it be used for? So it's used to help pay for COVID-related sick items. So similar to the Arizona paid sick leave, this is a paid sick leave that you can offer to the employee if they are affected by COVID. And I'll get into what that means in just a second. You can pay an employee up to 80 hours of sick leave. And then you also have nuances of the sick leave, whether the employee is sick themselves or they're caring for another individual who is sick. And then you have the emergency family leave, which is an expansion to the Family Medical Leave Act, which does not typically apply to small businesses. So all of these acts that we're talking about apply to businesses under 500 employees. All right, so the cover period of the Families First Coronavirus Response Act is from April 1st through the end of the year. Owners, if an employee is sick and they need to pay out mandatory paid sick leave, they can use this pay and they'll get an immediate payroll tax credit to be reimbursed those wages. So if you pay an employee their 2 weeks, if they're out 2 weeks, up to 80 hours, you'll get that back in an immediate payroll tax credit. If you do not incur enough taxes to have the full credit applied, where you're gonna essentially have a negative tax due, you would just pay a zero tax, and then you can apply for a refund, an accelerated refund by filling out a form, or you can wait until that your 941 tax return is filed, and then the IRS will issue you a credit or a refund at that point. So initially, when this came out, can it be combined with any other COVID-19 programs? Yes, it can, except if you have received Paycheck Protection funds, you can't use those funds, or in other words, those wages would not be forgiven if you use those funds towards mandatory paid sick leave or the emergency paid sick leave, because you're already getting that credit, you're already getting it reimbursed. So again, how does it work? It's an immediate dollar-for-dollar tax credit applied to the payroll tax on that payroll, or you can apply for a refund if it's more than what your tax liability was. All right, so getting in a little bit deeper on this act. So if an employee is subject to quarantine, has been advised by a health advisor, or experiencing COVID-19 symptoms, they are eligible for emergency paid sick leave at full hourly rate. Okay, so if you have an employee that is giving you this information and letting you know that they can't work because of these reasons 1, 2, and 3, they're eligible for the emergency paid sick leave for themselves at full hourly rate, up to $511 a day. So essentially it's $5,110. Now for items 4, 5, and 6 is caring for an individual experiencing these symptoms, or caring for a child whose school or place of care is closed due to COVID, or any other substantially similar condition that's been brought down by them. Same thing, offer paid sick leave for up to 80 hours. However, only 2/3 of their hourly rate. Okay, so either 2/3 of minimum wage or their regular hourly rate, whichever is greater, and also up to $200 per day. So 80 hours, up to $200, you get a credit reimbursed back, $2,000 through payroll taxes. Now for item number 5 specifically, if an employee is caring for a child and is unable to work because their place of care is closed, then they are eligible for the Emergency Family Medical Leave Act. Okay, so only specifically for number 5, are they allowed to extend another 10 weeks of emergency paid leave at 2/3 their hourly rate. Again, maxes out at $200 per day for 10,000, so a total of $12,000 in wages they can earn that would be a reimbursable credit to you as the employer. So this was really designed to help people who, in the very early going of this pandemic, to give employers the ability to pay employees wages who were unable to work due to COVID-19 reasons. Now, they also provided within the CARES Act, the Employee Retention Credit. So this was to encourage employers to retain staff even if they are unable to work. Now, this is not because they're sick or caring for an individual who's sick. This is because the business was losing revenue or was closed and had to lay off employees. Well, this employee retention credit was an option for employers to keep staff on hand. They would essentially, similar through a payroll tax credit, you would get 50% of 10,000 qualified wages back through a credit. So $5,000 per employee is what you would get back for each employee that you wanted to retain through this program. All right, so wages paid through March 12th through the end of the year. And these are for businesses ordered to shut down by government or significant reduction in gross receipts. So like I said, if you needed to retain staff and you were ordered to shut down or had revenue drop, you can retain your employees for as long as possible by applying for this employee retention credit and receiving 50% of qualified wages. All right, so it's an immediate tax credit applied to the payroll taxes when payroll is processed. However, this program would not be combined with the Paycheck Protection. So if you receive Paycheck Protection funds, you are not eligible as a business owner to utilize the employee retention credit. So essentially, you're not able to double dip here. All right, so now we have the employer payroll tax deferral. This is different than the executive order that was passed, which is the employee payroll tax deferral. So this is the employer payroll tax deferral that was a part of the CARES Act. It allows employers to opt in and defer payroll tax payments, Social Security, the employer portion of Social Security tax, defer it for the remainder of the year. However, there is no forgiveness tied to this program, at least at this time. So that means that when you're deferring these taxes, you're not paying these taxes in, but you would be required to pay back all incurred employer portion of Social Security tax, 50% by the end of 2021 and 50% by the end of 2022. So why is this a benefit? Well, it helps manage cash flow. So if you needed the extra cash right now to get things back up and running, what the government is saying, we will give that to you. You don't owe us this tax. And then with the hope of by next year, things are picking back up and you're back to full speed, if not stronger, and you have the ability to pay those taxes back in increments, half by the end of 2021, half by the end of 2022. Any business is eligible for this program. With the Paycheck Protection Flexibility Act, you now are eligible to utilize the employer payroll tax deferral if you receive Paycheck Protection funds. Originally, when the CARES Act was announced, you were not eligible. However, now, and I'll talk about that, you are now eligible if this is a program you'd like to opt into. All right, and then now the big one. This is probably the most familiar Paycheck Protection Program. The purpose was to provide a forgivable loan to businesses in order to pay their employees and keep them on payroll. So essentially, you could utilize it for payroll, health benefits, mortgage interest, rent, utilities, and other debt obligations. So how did they calculate this? The way they looked at it as, what was your average monthly payroll cost? Multiply that times 2.5, and that gives you what your loan amount is. So let's say your average monthly payroll cost is $10,000. Your loan amount could potentially be $25,000. Okay, so now you have $25,000 at your disposal. It's treated just as a loan in the beginning, but the goal is to have it forgiven, which I'll talk about. Any business under 500 employees, independent contractors, nonprofit, self-employed can utilize, or could have, it is now since passed, no one can apply now, but could have utilized the Paycheck Protection Program. And essentially, you pay your employees over the course of an 8-week period. This is the original law. And again, I'll talk about the updates. In an 8-week period, what it can be used for, and you want to exhaust all of those funds. So that way, when you apply for forgiveness, it essentially becomes a grant. So you're not required to pay back any amount that is not forgiven, or any amount that is forgiven. And the goal is to have 100% of those funds forgiven. All right. It's up to their bank and SBA for the covered periods, and they will decide the forgivable amount. So if you receive Paycheck Protection funds, I would still recommend holding off on applying for forgiveness. I would absolutely talk with your legal team, your banker, your CPA, and every other professional that you know. But there's still so many different updates and flexibility and things that are changing that potentially could favor you even further in the long run. So you're not required to apply for forgiveness right away. There is a timeline that you do have, but I would wait. It does not hurt you in any way because you're not having to pay back that loan as of today. So the Flexibility Act. So this is coupled with the update that also happened. On the left-hand side, we have the updated items that changed within the flexibility and the update, the original Paycheck Protection terms. So the loan deferral period, when you got your loan, within 6 months of disbursement date is when you would start having to pay the loan back, meaning you would need to apply for forgiveness within 6 months. Well, now with the flexibility, it extends it to 10 months or end of the year. Okay, so if you got your funds dispersed in April, you could have to the end of the year or early February to essentially apply for that. The forgiveness period used to be over the course of 8 weeks, but now it's 8 or 24 weeks. And the reason why this was changed was there was a lot of businesses without a ton of guidance when this thing came out, applied for the Paycheck Protection Program, thinking it was a great thing, but then realized, specifically think of a restaurant, realized they were closed down and they couldn't even function as a business. They didn't have anyone coming in, and there was 30 days, or think of your gyms or barber shops. Well, they had already received those funds. And so now that 8-week clock is ticking. So since they were not able to use those funds because their business was closed, the government realized that they need to extend the forgiveness period. So now you could utilize a 24-week period to apply for your forgiveness. Now the limitations originally were 75% of the loan proceeds must be used for payroll-related items. However, they changed that to 60%. So now, as long as you use at least 60% of the funds for payroll-related items, you should have a good chance of getting the, and the other 40% utilized on the other items that are eligible, you should have a good chance of having 100% forgiven. The reason for the change was a lot of employers wanted to use funds to help with PPE and to help with safety measures in their business and other things. And so they were trying to get the ability to use more on other things as opposed to strictly payroll. Now, employee reduction. Originally, your forgiveness was based on headcount. So if you had 30 employees when you applied or when you received funds, and then you go to apply and now you've only got 15, they would look at that and determine your forgiveness amount based on having an employee reduction. Well, no longer with the Flexibility Act, that's no longer based on headcount. So they will look at your reasoning on why you had to let certain employees go or why employees had to go to be able to help with that forgiveness. So that provides a lot of great flexibility for a lot of employers. Now that employer payroll tax deferral I was talking about earlier, originally you were not eligible if you received PPP funds, but now with the flexibility you are eligible. And then the loan maturity. Again, this is still up to your bank. They have the discretion for loans. I believe the date is before June 1st if you receive funds before that. It was originally designed as a 2-year term loan. Still a very, very low interest rate, but it did any unforgiven amount of your Paycheck Protection funds would need to be paid back within a 2-year term. With the Flexibility Act, they changed that to a 5-year term. Okay, so those are some of the highlights of the update. And then last but not least, the employee payroll tax deferral via executive order. So in August, it was announced that an executive order was in place to defer employee Social Security taxes from their wages. So the purpose was to put more money back in the employer's pockets now, or the employee's pockets now. So that 6.2 would now be deposited into their net check. You would not be required to make that payment through the end of this year. So any tax deposits through the end from September 1st through the end of this year are deferred. They are not due. But any employee whose employer voluntarily chooses. So there's a lot of things that we're still waiting guidance on. There's a lot of questions that we still need answered on this executive order. One of those is the employer opting in or out for all employees, or is it an employee by employee choice? And we don't know that yet. Can it be combined with other COVID-19 programs? Yes, it can. But once it's elected, then it's deferred for the end of the year, but it is due back within the first 4 months of 2021. So it's only deferred for 4 months. It's not like the employer deferral where you pay 50% back by the end of 2021 and 50% back by the end of 2022. This one's a little bit different, and they're saying defer taxes for 2020, but then must be repaid back by the end of April in 2021. Otherwise, the employer will start incurring penalties and interest on those deferred tax payments. And what's interesting is as of right now, we're still waiting for their guidance, but it's the employer's responsibility. So some of the questions that have come up are, well, what if an employee defers those tax payments for the next 3 months, and then they leave my company in December, and I don't have the opportunity to now deduct more to recoup those funds back, recoup those taxes back from the employee? I'm still responsible as the employer to pay those taxes in on behalf of that terminated employee. So there's still, like I said, a lot of guidance, many questions to be answered. We are staying on top of it as payroll professionals and HR professionals, and other local professionals around here are understanding these laws and understanding what's best for business owners and trying to advise them on that. But this one is the newest, and it is available, but there's still a lot of questions to be answered. And then we also don't know if the tax will be forgiven. So if it is deferred, we don't know if there may be a chance that it will be forgiven, and then that's great. But there's also a chance that it may not. So just some of these questions that we don't know and need further guidance on. All right, so we went through all of the high-level payroll-related items. We went through all of the COVID-19 related grants and laws and nuances that employers have to go through. So let's talk about a few best practices and how to streamline some of these things and what can make your life a little bit easier as you navigate through these waters. First and foremost, definitely find yourself a payroll software. Make sure it calculates payroll and tax payments. Make sure it has those Social Security, Medicare tax payments and all of that built in. Make sure you can easily set up employees within the system. The very last thing you want to do is try to use Excel or try to calculate these things by yourself. You definitely want to find a system that will calculate this for you if you plan on continuing to process in-house and handling these things, as well as being able to create tax payments and file tax returns. All right, and make sure you have a rock-solid employee handbook. I can't stress this enough. I see this a lot where there's a lot of business owners that don't have a handbook, which a lot of them don't because it takes a lot of work. It is building the foundation of your business, and it's providing guidance for your employees. But having a rock solid handbook to have the employee review and sign off on gives you a leg to stand up on and say, in our handbook, it states this, as opposed to willy-nilly just, on the fly, doing this for one employee, doing that for one employee. That's where it can get employers in a lot of trouble. And then again, create job descriptions for each position. Not only does it help the employee understand their role, but also protects you as the employer to say, these are the duties I've outlined, and if you end up terminating that employee for any reason, maybe they didn't fulfill one of their duties or the results aren't there. If you have a job description that says this is what you were supposed to do and you're not doing it, then that gives you, again, in case of an audit or a lawsuit or any type of litigation, it helps having these types of things on file to go back on. And then create a process for tracking COVID-19 related items. So all of those laws that we went through, understand it, educate yourself, talk to your network, and be sure to create processes around these and the best way to handle these laws and regulations. Because if you're going to utilize and opt in any of these items, you're going to need a good record keeping. You're going to need, in the case of a potential audit, they want the IRS or Department of Labor, whoever else that will want to see that you're tracking this information. Okay. So again, as a business owner, educate yourself and always, always, always communicate effectively with your employees. They are going through a tough time just as much as you are. Being there for them, communicating with them, helping them understand what you're doing as a business, as well as what your understanding of everything that's going on through unemployment benefits and all those types of things will help keep that culture and keep that camaraderie and keep them engaged in the workplace. All right, so lastly, we'll talk about best practices for a virtual world. Now, I always say, and I may be biased, I've been in this third-party payroll processing world for a long time. Smartest thing you can do for your business is to outsource your payroll and HR functionality. So many times we see clients coming over utilizing QuickBooks or some other platform and handling payroll processes in-house. When they make the decision to outsource payroll or HR related or tax related items to a third party, there tends to be a lot of cleanup because they don't have necessarily the experts behind the scenes that are working to ensure compliance, whether it's a pre-tax deduction or post-tax deduction, or maybe taxes were never calculated or paid in, and so you have to go retro and make sure we get year-to-date backup. And maybe there's manual checks recorded and no taxes deducted at all, but then it won't reflect on the W-2. So outsourcing your payroll, it's an inexpensive and a surefire way to ensure that you're compliant with the different rules and regulations. Now, obviously, you're going to have bad apples in every industry. So vet out your payroll providers, check their reviews, check their references. Make sure that you're asking friends if you've ever heard of this company. If not, do your due diligence. Every industry in this world has bad apples, and we hear stories about this in the payroll world. There's always one or two where that they aren't in compliance and they aren't ethical. So definitely vet out your payroll providers. 99% of them are good, and they are whatever needs and processes you need to streamline, or whatever support you need, you can find different providers in different areas of need for your business. And then again, ensure they're set up for these COVID-19 related laws and regulations. Make sure they've got those emergency paid sick codes. Make sure they've got the employee retention credits available. Make sure they can turn that on for you to decide in the deferrals if you decide to opt into those. Okay, so those are the types of questions to ask when you're vetting out your payroll providers. Now, onboarding new hires, we talked about the I-9, the W-4, the A-4, direct deposit forms, your handbook, your job description, and all these company policies and documents. Look for your payroll provider to have an electronic onboarding process. We are learning a new normal where a lot of what we do is virtual. If there's an electronic onboarding process, that allows you to onboard and set up new hires electronically by them completing the I-9, W-4, A-4, all of those federal and state forms online. And essentially allows them to set themselves up for payroll. So not only does it help you in a virtual world, but it also, the employee is setting themselves up by filling in all of their own information. So instead of you handing them a manila folder to fill out the paperwork by hand, and then you going into your payroll system and entering in or keying in that data, if there's any typos, the employee is the one that filled all that information out. Now, obviously, working with the payroll service, you'll have support and they will help you update information if it's incorrect. However, having an electronic process for onboarding is a great way to streamline processes as you have experienced turnover or bring on new employees through growth. And then having secure portals for employee pay stubs and W-2s. Employees like seeing their data. They like to see their pay stub. Again, Arizona has a mandatory paid sick leave that we discussed earlier that requires these balances in the earned paid sick time on their pay stub. Make sure the payroll provider can provide a secure portal for the employee to access their pay stubs, their W-2s, to update their tax elections, update their direct deposit, a little bit of a self-service. This also is good for when employees are terminated. Many times when they leave your company, they may want to go get a mortgage or go get an auto loan, and they need to see previous pay stubs. Well, instead of reaching out to you as the previous employer, they can access their secure portal as a terminated employee. There's nothing they can do within it other than view their data. They can go in and download that information. So that makes it really easy on an HR manager or a business owner to say, hey, go ahead and just log into your Hub account. Everything you need is in there. Pay cards versus paper checks. I touched on it a little bit earlier. Pay cards is a great electronic alternative to paper checks, streamlines the process, it's very cost effective, and it's very simple to set up, and the card will stay with the employee. It comes with a routing and account number. It's their card, they can use it whenever they'd like. And then integrated time tracking system for hourly workers. If you have a lot of hourly workers and are tracking time, make sure you have a system. I see many times employers will have an Excel spreadsheet and they're tracking time manually, or they're using paper sheets and employees are writing their time down. That potentially opens the door for time clock fraud. What I mean by that is they may write down 7:30 when they really showed up at 8. And if there's no supervisor to check them on that, then they can get away with it potentially. So having an integrated electronic time tracking system can go a long way in saving the company money and saving the hassle of or the potential time clock fraud from an employee. But if it's integrated with the payroll system, all you have to do is approve the hours, and then it syncs over into payroll, and then you click submit and you're done. And then lastly, having a dedicated HR resource for further guidance is an absolute steal of a service. It's very inexpensive when you work with a payroll provider that has HR resources. Not all of them offer HR, but if they do offer HR, it is a fraction of what it would cost to hire an HR professional or and bring that person in-house. So definitely look for payroll companies to have HR resources. If nothing else, at least have an HR contact they can refer you to help you through this guidance and all of these different items and nuances as we go through this pandemic in 2020. But on top of that, everything else that goes on throughout the life of a business owner. So thank you very much. I have about 7 minutes left. I hope everyone got some good nuggets from this and picked up some best practices as well and got some good education, good information on the different things that go on in the payroll and HR world. But at this time, if there's any questions, Elizabeth, I don't know if we had any in the chat box or if we want to open it up for people to ask questions on how you want to do that, but I'm available for the rest of the time to answer any questions that may be out there.
Yes, thank you so much, Stephen. This was really, really valuable information. If you have any questions, we'll be answering them in the last couple minutes here. I did receive a question here, and I'll let you know here. If employees were overpaid sick hours, does the employer have the right to automatically deduct from employees' wages to pay back overpayment without employees' authorization?
Yeah, if an employee was overpaid, whether it's sick or regular time, it's always a good idea to have that communication with the employee. Say, hey, look, you only took 8 hours of sick time, I accidentally paid you for 16. This is how we're going to do this. And then you work with your payroll company to reconcile that and voiding those checks and then reissuing new checks or whatever you need to do. But yes, it's okay to do it. I wouldn't say automatic. I would always err on the side of caution and again, effectively communicate with your employee, let them know that there was a payroll error and then you can go ahead and recoup those funds, the overpayment.
Okay, wonderful. Thank you. Any other questions? Since we're a bit of a smaller group today, you could also feel free to unmute yourself and ask away. Anna says, great information. Thank you so much for going all over that. And Luis here is asking, what programs, apps, or websites do you recommend for time tracking? So it's a two-part question. And then what about for employee pay stubs and W-2 onboarding process?
So we do at Journey Payroll and HR, we do offer that. We have an integrated time clock that works within the payroll system. And we also offer what we call a hub account, where employees can activate their own personal portals to access their pay stubs, W-2s, and it's all automated. We do have clients that, especially in the restaurant industry, that may use their POS system as a time tracking platform. I've heard of platforms like Toast or even people using Square. POS system is another platform that they could use for time tracking. So there are a lot of apps out there that you could utilize. However, if you are looking to outsource your payroll and HR and tax process and all that, majority of the payroll companies will have those employee portals and they will have those time tracking apps built within their platforms, which makes it for a really easy process. You're not using too many different solutions.
Okay, wonderful. Thank you so much. If we have about 3 more minutes or so. Any other tips, Stephen, that you could maybe share with everyone who's attending today, or any last minute remarks that you'd like to give everyone?
Sure. Yeah. No. Again, thank you so much for having me present here today. I do have my contact information here. If anyone wants to reach out, feel free. I love. Like I said, I'm one of the owners for locally owned Journey Payroll and HR. I love to be a resource. I'm happy to help. We are members of the Hispanic Chamber of Commerce as well. We are more than happy to be a resource for anybody on this call or anyone a part of the chamber. If you do want to follow us on social media, we post a lot of blogs. If you can go to our website, journeypayroll.com. We post a lot of blogs on these items. And quite frankly, a lot of the information I went through today came from what we have on our website. And so we do a lot of due diligence. We do a lot of communication with our clients and the community, and provide that at your disposal. So feel free to follow us anywhere on these handles, Instagram, Facebook, LinkedIn, and then again, on our website, we'll have a lot of information there. There's a COVID-19 Business Resource Center that you can access at the top. That'll have a lot of different, really good knowledge and information in there for you too. So if there's no further questions, again, reach out to me anytime, or get in touch with Elizabeth and she can, provide my contact information. But again, I really appreciate everyone's time for jumping on today, and hopefully got a few nuggets to take back.
Great. Thank you, Stephen. And thank you everyone for attending today. We'll share Stephen's information in the post-event email. And we look forward to seeing everyone in our next webinar. Thank you and have a great rest of your day.